We are absolutely convinced that once XRP reaches this pivotal milestone, it will skyrocket to unprecedented heights. We're not just talking about $1, $2, or even $3. Expect much higher figures. While we're not suggesting that XRP will soar to $1,000 or beyond, double-digit prices are certainly on the horizon. A significant catalyst is in play, and it's crucial for everyone to prepare. This September marks a massive accumulation phase, presenting a golden opportunity to create life-changing wealth. None other than Cathie Wood will shed light on this exciting development. If this intrigues you, make sure to subscribe to the channel and like the video to stay updated on future insights.
The VIX crossed 65, which is the fourth largest measure of volatility in the market, really in the last 40, 50 years. And I've been around for all of them. So it's fourth after 08, 09, the tech and telecom bubble in 2000, and 1987. Now, what does this mean, this volatility alert? It usually means the market is meeting a cathartic moment, or is in a cathartic moment. And it usually means something is changing. And as you know, we have believed for quite some time that the U.S. economy, and maybe the global economy, has been going through a rolling recession ever since the Fed started raising interest rates. Well, the other thing that was happening during that time, apparently, was an increase in the carry trade involving borrowing yen, so really shorting yen, and buying dollars and investing them into higher yielding assets than in Japan. So playing the spread.
Cathie Wood has recently highlighted a significant shift in the financial landscape, where funds are moving from the bond and yield markets into leading cryptocurrencies like Bitcoin and XRP. This transition is particularly timely, as the Federal Reserve is anticipated to cut interest rates soon, potentially as early as September 2024. Such a move by the Fed could further stimulate investment in cryptocurrencies, making this an opportune moment to enter the market. XRP, in particular, is poised for a potential breakout despite recent market challenges. Analysts suggest that XRP could experience a significant price surge if it breaks out from its current multi-year triangle pattern. Moreover, with Ripple's recent legal victories against the SEC, optimism around XRP is growing, potentially driving its value higher. As the market prepares for these developments, staying informed and ready to act could lead to substantial financial gains. Furthermore, Ripple has recently secured strategic partnerships in Korea and Japan, aiming to enhance blockchain utility and expand its influence in the Asian market. By collaborating with prominent financial institutions in these countries, Ripple seeks to bolster the adoption of its technology for cross-border payments and other financial services. These partnerships are expected to increase the efficiency and speed of transactions, providing a competitive edge in the rapidly evolving fintech landscape. As Ripple continues to strengthen its presence in Asia, these developments could significantly impact XRP's market potential, aligning with Cathie Wood's optimistic outlook on the future of cryptocurrencies. So let's listen to what more Cathie Wood have to say on this.
As I'm sure you've noticed, the stock market's correcting quite significantly, the correction we've seen in the last week. Bond yields are falling fairly dramatically. Commodity prices are falling and in some cases breaking down. Yield spread, so the spread between high yield bond rates and treasury bonds, that spread is starting to gap out. So the fear is seeping into the markets in many ways and in many indicators. And we do have a point of view, and so I'd like to introduce it. You've heard it here before if you've been listening, but for those who haven't, I'm going to say this is slowly, then all at once. So we have been talking about the rolling recession that has been in place actually since the Fed started raising rates in 22. As soon as the Fed started raising rates, housing effectively went into a recession. Commercial real estate office was already in a recession. Now multi-family real estate seems to be an issue now. We've seen autos stall out. They've kind of stabilized but stalled out at subpar, meaning subnormal expansion rates. We're seeing capital spending come down. We're seeing consumer confidence relapse. Housing was starting to pick up its head and has relapsed again, certainly if you're looking at sales. So we've had a rolling recession, and now we seem to be in the all-at-once phase. Many people are beginning to understand, we think, that perhaps the idea that inflation is the problem has been misplaced. And this rolling recession is going to end with pricing coming down. So I've been saying the risk is deflation, prices coming down, and listening to Amazon's report last night, it's clear the consumer wants lower prices and is getting lower prices. The consumer is not falling apart yet. It's actually responding to some of the lower prices, even in autos. But nonetheless, falling prices, which is a problem for companies. It means their margins are going to compress. So the all-at-once has to do with deflationary signals. Now, this week we got the PMI, Purchasing Managers Index, and today the employment report. Both of those are recessionary. So this idea of we're in a recession is beginning to gain more traction. And in fact, the SOM rule in the unemployment report, basically the unemployment rate going up by 50 basis points as measured on a 3-month moving average basis relative to its low, that triggered. And so a lot more people are now thinking recession. Now, we're not thinking at all, when we say all at once, anything like 08, 09. In fact, the rolling recession part of this scenario would argue against that. So we're not at all suggesting that, but we are suggesting that this focus now on pricing power is going to be significant. And the reason it's significant is, in the early 80s, when Fed Chairman Volcker was trying to strangle inflation out of the system with double-digit interest rates, inflation was also at double digits. So if he was going to make a mistake, that was a big buffer to make a mistake. Our inflation rates today are much lower. And so the Fed actually has less room for error. And I do believe that higher for longer and thinking that inflation was the big risk out there has put us somewhat in harm's way. But half of the solution is understanding the problem. And so I think this cathartic moment is good. It's painful, very short term, these corrections are, because there's a lot of confusion. A lot of people have assumed that the world was going to work one way, and all of a sudden it's not.
As we wrap up our video and delve into Cathie Wood's insightful predictions for the global and crypto markets, it's clear that she maintains a positive outlook, anticipating significant growth ahead, with funds shifting from traditional markets into cryptocurrencies like Bitcoin and XRP, and the Federal Reserve's potential rate cuts on the horizon. The stage is set for a remarkable period of opportunity. XRP, in particular, is poised for a breakthrough, with analysts predicting a potential price surge if it can break out from its multi-year triangle pattern. This September marks a critical accumulation phase, and Cathie Wood's insights highlight the importance of preparing for these developments. If you found this analysis valuable, please like the video, subscribe to our channel, and hit the notification bell to ensure you don't miss any future updates. Thank you for watching, and stay tuned for more exciting content.